There we are.
Hi, everybody. It's Jane Johnston with the Briar Hill Group at Remax Camosun, host of Vancouver Island Time, and co-host of He Said, She Said, They Said with...
Hello, I'm Andrew Plank, co-host of He Said, She Said, They Said with Jane Johnston. I'm Andrew Plank with Royal LePage. And we have today Jen Lowe. Jen, would you like to introduce yourself? Hi.
Good morning.
Good morning.
So what company are you with, Jen?
Oh, sorry. I'm with DLC Modern Mortgage Group.
Okay, that's the Dominion Lending for those who want to
Yes.
I was going to say, have you changed? I thought you were with Dominion.
Yes. Sorry. Yeah. Dominion Lending.
Right on.
Okay, Andrew, you want to share the stats for this week?
We're going to go right into stats. Okay, so just give me a sec here. We'll pull this up. And should be...
For you guys.
Is it up? No. Okay, we're still having our... That's weird. It takes some time. There it goes. There's like a huge delay, but we've got it now.
Okay, so net unconditional sales up to May 10th compared to May of last year were 259 compared to 457. So what's your prediction there, Andrew?
Well, I still think we're going to be moving towards like a bit of a slower summer, but it's interesting that we have less sales. Well, of course, we're not too far into May yet, but yeah, I think we're going to be moving to a bit of a slower summer. But that being said, I don't know. It's really hard to tell. Everything is up in the air right now.
Okay. Well, last year we were in the middle of COVID, right? So
yeah.
I'm expecting we'll probably have about 800 sales. I think that would be around normal. So I think we're on track for that.
Mm-hmm. Looks like it. Yeah. 365 new listings so far this month compared to 1,095 last month for the whole month. I think a lot of people have been waiting to see what happens with the vaccines and COVID. We've had people listing all throughout the pandemic, but people are starting, I believe there's a bit of a let's wait and see what happens going on. So that's one thing I'm noticing with that.
Well, also we have a big announcement coming with stress test and all of that. So that I think will affect things. Jen can talk to us about that. Okay, so active listings, we're up. Wow, almost 1,500.
Yeah, every month, every week, every day, we're kind of bumping up a little bit more listings. Yeah.
That's great news.
It is. Yeah. And I'm seeing more price reductions, which we'll get into. I'm seeing some prices that are just frankly seem to me ridiculous. And I think maybe there are more listings coming on, which we see in every market that have that scatter of, really reasonably priced that sell really quickly. And then, really well priced that sell really quickly, reasonably priced that sort of are on market for a reasonable time. In this market, that's about a week. and then the overpriced listings that sit around.
Right.
But there's more of those.
So new listings, 312, pending 242. So we're way down from our 1-to-1 ratio we were at just like 6 weeks ago. And what you were saying about the ridiculous prices, we have 54 price decreases. So that says to me that people are going, hey, probably sellers are wanting to sell where people were selling previously. But just speaking from my own experience, I have 2 listings on the market. One's probably priced a little bit high and one's priced reasonably. The reasonably priced one, we're getting a lot of showings and I'm expecting multiple offers today.
Nice. Well, we look forward to hearing about that.
Well,
yeah, I mean, it's interesting to see the that light green line, the price decrease 54. It's a much, much bigger line in comparison to new listings than we have seen in quite some time.
Yeah, and I think it just goes to say that, as realtors, we don't always set the price. We're negotiating price at the listing and we're negotiating price at the sale. So people should understand that the sellers have a say in what the listing price is, and they may not always take our advice.
Mm-hmm. Absolutely.
Okay. So actually, how was your week last week?
My week? Great week. Yeah, really busy. Quite busy. Ended up removing conditions on a place. I've got a new listing that's getting a lot of activity. A lot of active buyers still really, searching for homes. I'm really noticing, guys, that there's a lot of places coming up. And again, I'm seeing prices that it's a bit of a scattershot on prices, but prices in the core versus prices a little further out. I'm starting to see a lot more divergence in the quality of product and the price point, which sort of suggests to me that things are going a little bit off the rails is maybe too strong a word, but people are, it's almost more randomized where prices are going. I think people are trying for a lot more money than they were in the past. And I'm also seeing a lot of properties that weren't getting the same kind of activity in the past, getting a lot of activity. Like when I'm making showing requests, I'm seeing, no windows for showings for certain properties. In other properties, they're just wide open.
Okay, so you're speaking in lots of generalities. So let's just can you take? Let's be specific. So can you take down the share thing?
Yeah, absolutely.
Okay, so what do you mean exactly?
So a property in, let's say, Fairfield for 1.3 million, listing that looks like a pretty standard looking home in Fairfield versus, I've got a listing 2 acres, almost 2 acres in Brentwood Bay, really, really beautiful custom home. It's getting lots of activity, but I can tell, from feedback and so forth that it's not getting the same kind of activity that I think a property might, attention that a property in Fairfield might get. I mean, location is really important, but when I look at the core fundamental of, the land you're getting, the value of the home, it feels to me like there's a lot more divergence. I don't know how to describe it better than that.
I think it's a totally different buyer though, because who you're going to get moving into a house in downtown Victoria is going to probably be a young family who doesn't want to you have 2 cars, and they probably want to walk everywhere, and they consider walkability score really important, whereas the person who lives in the country is probably likely to want to grow their own vegetables and
true.
Be a part of the 4-H club.
Yeah, true that. I just do feel like there's a lot more divergence. That's all that's all I can say.
Well, so I have a listing coming up in Machosen that has a very steep driveway. And so I said to the seller, like, when we list this, you just have to understand that this is a very important factor. Like, a lot of people consider getting up and down the driveway a very important factor. And we're going to have to be careful when we price it, just so that it's appealing, so that people overlook that. So I don't know. I found what happens is when the market contracts, exactly what you're saying. So you see less sales happening further out, and then the core still remains hot.
Yeah.
And it's like a flame, right?
Yeah, exactly. Yeah, concentric rings as it expands and contracts. Yeah, and that's what I'm saying. I'm seeing a little bit more contrast between, properties that are listing and selling in the extremities versus properties that are listing and selling in the core, price points, and just general activity and desire. So
I'm gonna ask you a quick question.
Yeah.
Is there statistics around, like, when you price a property for a seller, in them taking your advice on recent sales, not properties currently listed, and determining what that price point is and driving that price up for multiple offers versus trying to list it higher? Like a percentage of how many properties are selling above the asking price.
So
you see what I'm asking?
Yeah. At our sales meeting, we have a realtor in our office, Leo Speltz-Holtz, and he does a real estate blog called House Hunt Victoria, and he does a report to us at our sales meetings. And he actually looked at exactly that recently. He looked at, do you benefit or not benefit by underpricing your home and setting it up for multiple offers? And he found that on the whole, setting up for multiple offers, you don't lose. You generally tend to win. You tend to get more money
higher
sale. Yeah, than going higher and hoping for that one buyer that's going to bring the higher offer, or hoping that you get offers based on that higher price point. You actually end up usually selling faster and for more money by actually, in this kind of market, by pricing lower.
So what I do, Jen, when I'm looking, let's say a single family home with a suite in Happy Valley area, I look at the range of, so you would do stuff like put in your criteria, like 4 to 6 bedrooms and 2 to 3 bathrooms and double car garage and all of that, right? Then what you do is I sort it by price, and I look at where is the price listed and where is it selling. So this would be list, like linearly, list, sale, list, sale, list, sale. And ones that were, if it's from lower to higher sales here, where you see at one point you see where there's a listing and you go, the sale is lower, the sale is lower, the sale is lower. So you see there's a cusp, which is kind of like the market value. So let's say the list price is 1.2 million. At 1.250, everybody's selling at 1.199, and at 1.99 they're selling at 1.250. So there's a bit of a, you begin to see like, oh, like this is where the activity is hot till, and then after that it kind of like the sales start to spread out, and that's where you realize, oh, okay, you're overpriced.
And I guess it's a constant moving target.
True. It is. Yeah. It's kind of like, yeah, it's a constant moving target. Everyone's always sort of saying, well, that was where the last sale was. I want to go here. Now it's where the last sale was. I want to go here. And not only that, the buyers are also, have been traditionally looking at the last sale, saying to the realtor, how much do I have to bid to win this? We advise, this is where the sales have been. Do you really like this home? Yeah, I really like this home. I really want to make this work, and I'm tired of looking. Okay, well, this is what most of them are selling for. You have a good chance of winning it. This is the value. Okay, well, I really want it. I'm going to bid higher. And then the market goes higher.
And so what we're doing now with some of my buyers is, Jen, we're actually looking for homes that are overpriced, because we figure that the sellers will now expect less than asking because they can sit on the market. So whereas before what happened was everybody was pricing at market value. Now there are some people who are pricing higher, which is what Andrew was saying, and so the buyer's not going for it. So now we're looking at houses that are up here because we know that their strategy is probably to list high and negotiate. And so, we're able to get some money off.
Oh, brilliant. And then I guess you can look at the days on market for how long it's been on the market. Great.
Right. And not everybody gets offers, even though they thought they were set up to receive multiple offers. And as Jane referred to, we don't always set the price. So people sometimes list a home saying, I want to set up for multiple offers, and I want the top dollar, and I think I'm going to get above that. And so then offer day comes and there's crickets and tumbleweeds blowing by and nobody's calling you. And so the property's still on market. And then a week later, in this market, if you've been on market for, you're an old stale listing after a week. People assume it's sold and they're not calling you because they just assume it's under contract and they're moving on. So that's where there's some opportunity if you can circle back on those. Yeah.
So what's happening?
So I'm just pulling up an example because there was an agent who listed. Oh, this isn't the same one. Never mind. Well, so I've seen examples of this where someone lists a home for sale. They overprice it by accident or by purpose. They don't get offers on the offer receipt day. And then so they do a price reduction, and they do a dramatic price reduction. And then the next thing you know, they end up in multiple offers and they get the price they were originally asking.
Yeah, it's weird.
It is really weird.
Yeah. I think it's because what happens is, let's say you're pricing for a single family home, you're pricing at $1 million, which is the average house price now. And so people will be like, oh, well, they're expecting multiple offers. Then they won't offer because the whole financing, as you know, changes over $1 million. Then they offer then they reduce the price to $899 and they get like 6 offers and one of them is 1.15 or something. I don't know.
Yeah. Because once you're competing, people know they have to pay all kinds. Our networking group had a meeting on Friday, and one of my colleagues was relating a listing. I viewed this listing on Saanich Road. They got over 90 showings on this property, and it was a good it had been updated. It was a seller's own property. He had fixed it up and had been living in it, but now he was selling it, and they'd had over 90.
Realtor? The realtor?
Which realtor? Mitch Lidstone.
Okay, but you said it was a seller's own property?
It was a realtor's own property.
Okay, yeah.
Anyway, over 90 showings, 3 offers. Only 3. And I think it's because it had such activity. I think people said, you know what? I don't think I have a chance.
Is there any discussion about the blind bidding going by the wayside or?
Yeah, lots.
Yeah.
Yeah, actually, Jane, I was just reading this morning, 2 execs from RE/MAX are actually suggesting, the 2 top execs from RE/MAX apparently, it was I don't know who they are because I just scanned the article, but they're recommending this, if Canada get away from blind bidding. But there's a problem with that because if we go to auction, no 2 buyers are alike. Jen, as you know, the vetting of the buyers, the financial position of buyers. If I'm looking at just numbers in an auction, I don't really know if these buyers are going to be able to come to the table with the money at the end of the day, or if, so I just don't know how an auction would work. But there's the blind bidding thing is problematic for a lot of people.
I think it's also problematic because it's just focused on price, and I know that we were in a multiple offer situation last week, and we won based on the fact they liked our buyers.
How did they like your buyers? What did they like about your buyers? What was it about your buyers they liked, and how did they know about your buyers? These things that they liked.
Tell you. It's a secret.
Did you do a video, a song and dance? Do you have a very nice letter?
I don't know. They liked our offer.
In the States, they're really careful about outing the buyers, because if a seller selects a buyer based on some sort of criteria that could have to do with fair housing, it can be really problematic as well. So it's really complicated.
What I did was I disclosed to the sellers what the deposit was. And we did have a condition. Our only condition was financing, but they needed an appraisal.
You mean, well, you said deposit, but you mean, because deposit would be on the contract. You mean the down payment? Yeah. Okay. Thanks.
Well, that's a good strategy.
Yeah.
Yeah.
So you said, okay, we've got this is a $1 million property, and we've got $600,000 to put down, something like that.
Yeah.
Which says to the seller, okay, these aren't going anywhere.
File, yeah, or strong clients.
Mm-hmm.
Yeah. Because I don't know about you, but I classify buyers like there's A+ buyers. Woo, you want them, and then there's your C, which you think hopefully it'll go through.
Sorry, Jane, I see all buyers equally.
I mean, when you're a listing agent, so you have to ask questions.
Mm-hmm. You have to understand what the risk is. And I always say to my clients, what's the chances? These folks have written a really nice letter, and they seem really wonderful, but what are the chances they're going to be at the finish line on closing day with the money?
Yeah, exactly. Okay, so let's talk about what's happening, actually.
Yeah.
Actually, I want to know, so if somebody gets pre-approved now, or they get an offer now with this new stress test coming in, first of all, what is a stress test? And can their offer be bumped off the rails if the rules change?
Yes. So the change to the stress test is that the qualifying interest rate is increasing from 4.79 to 5.25, but only for people with more than 20% down payment. So it's not changing anything for first-time home buyers with less than 20% down, or anyone. You don't have to be a first-time home buyer to have less than 20% down. So if you have less than 20% down, you still have the qualifying rate of 4.79.
Why is
That's
that?
weird.
Why the change in that direction? I don't get it.
No one really knows, honestly. It's an interesting move because who's it going to affect is really the small area of people that it will affect are those that sort of middle class, relatively higher income earners, or that have got a good nest egg that are looking to get into their first home, or with at least 20% down. So it's reducing those people's purchasing power by about 4.5%. But if with a conventional mortgage and you have more than 20% for a down payment, bank lenders are able to, we're able to obtain an exception if they have investments, high net worth. There's lots of programs already in place for those that can't qualify based on that.
Is it to stop people from buying investment properties, maybe?
I don't know. Like the government, unfortunately, has put in multiple. They brought in the foreign buyers tax. They brought in the speculation tax. All these things that we're trying to cool the market, and none of it has worked. So, as it stands right now, and I belong to a lot of mortgage broker, forums and groups, and people are really not clear on what the plan is here with this. It's going to create a bit of panic. And it will affect a small group of people that are just trying to squeeze in with just 20% down, and they don't have substantial savings. But for the majority of people that have at least 20% down, they're not just squeezing in.
Okay, let me ask you a question.
Yeah.
So you have a buyer who previously they wanted to avoid CMHC.
Yes.
So they 20%.
Yeah.
And they qualified at 4.75.
Yeah. 4.79. Yeah.
Now those people are going to put down 19% and pay the CMHC penalty so that they'll qualify under.
Yeah.
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 Or the other thing is that you can qualify when you have 20% down. Your maximum amortization, or here I'll take a step back. So if you have 20% down, you can qualify under the CMHC rules and pay an insurance premium, and then you would qualify at the 4.79.
And what is the premium though? Like let's say on $1 million.
Well, yeah, because then you got to think of all these other maximum pieces, right? Where purchase price has to be under $1 million for using CMHC premiums. The premium would be 2.4% of the mortgage amount.
So $24,000. And for $500,000 for a condo, how much would the premium be?
I'd have to look it up, but it'd be if you were putting 20% down, 25-year amortization.
This is why I'm not a mortgage broker.
It's funny because in our real estate courses that we had to take so many generations ago, it was all math and mortgage financing and had nothing to do with anything we do in our real estate course, our real estate lives in reality. But we should know all this stuff, but it's in our memory banks far, far, far back.
That's what I'm here for.
Thank you.
The premium would be $9,600.
Yeah. So it's interesting. Jane had a good point. I was thinking similar. Like, so if someone, is under $1 million and doesn't qualify with under the new regime, they could choose to go high ratio, and they would qualify for more, but they would have to pay a little more because they'd be paying CMHC fees. If they are someone who is looking for an investment property, as Jane alluded to, you're going to need to put 20% down for an investment property. So you're not going to be doing CMHC. So you are going to have to qualify for higher, or if you're buying above $1 million, any property above $1 million. So it's really affecting people who are. You're shaking your head. Am I wrong?
No, you're right. I'm shaking my head because I think it's sad. I think it's a poorly thought out policy. I'm agreeing with you.
Yeah. Okay.
Yeah, pretty much.
They call it the K economy, right? And they're trying to help these people who are at the lower end, but I don't think it's helping them.
No,
yeah.
The people that have already established wealth with real estate or have investments and stuff like that, it's not going to affect them at all. It's affecting the people, like you said, that have saved up, just gotten that 20% down, wanting to put it into real estate, and now they qualify for 4.5% less. Unless we can mitigate and looking into their financial situation, if they're self-employed, finding a lender that has a program where we can gross up their income by up to 25%, or they have child tax credit. They've got 3 children and they get the child tax credit, and that income may not be used by the lender, but we could get an exception to the ratios because we know they have that additional income.
So I'm sure many of us, there's a lot going on with what you just said. And I think the core of what you just said is, even though we might on the surface have been told by the government this is what the rules are, and we might, if you were out there as a buyer saying, I don't think I can afford this because of this change, the bottom line is talk to Jen, because there might be some other options available to you.
Yeah, in my job, I'm asking as many questions as I possibly can to get the full picture and make sure that I'm not missing any potential income they're earning. Lots of people, they'll say, well, I just have this job, and I've been making, pottery, but it only earns me $5,000 a year. Well, you know what? Sometimes, especially in these situations, that can make the difference.
Right. Absolutely.
So I'm just thinking maybe what they're trying to do is put pressure on the lower end housing for us to lower the price by 5%.
It's just not going to work that way, though.
No.
Yeah. And we don't set the pricing.
And it's not going to affect the supply. They've proven, unfortunately, it's been proven that all these extra taxes and stuff that they brought in, that they were trying to lower the demand, it hasn't worked.
No. And when they do eventually make some change that does impact demand, it'll probably be right at the point where demand is already cut off. It'll just kill the market entirely, because that seems to be how it works. It's a little bit too little until it's too much.
Yeah.
What do you think is going to happen with interest rates overall this year, Jen?
On the variable rate side, my thought, they can't go further down. They will eventually increase. But as the Canadian government, everything we do is, when they change interest rates, it's very cautious. They make a change and then they see the effect of that change. So the outlook on the variable rate side is that it's supposed to remain low into at least the end of 2022. On the fixed rate side, we've definitely seen a bit of increase, up to 2.09 to 2.29%. For the fixed rates due to the bond market, but it's still extremely low.
Absolutely.
Yeah. Just so you know, I'm coming up for renegotiation. And my
Yes.
Jesus. I
Well,
totally that one.
It's so hard. I think of actually that often, that logic at that time, fixed rates were lower than the variable rate. So logically in your head, you go, okay, well, no, like, why wouldn't you take a 5-year fixed? However, statistics show, and they've always shown, that the variable rate has outperformed the fixed. And that was a perfect example that over time, it really has outperformed the fixed, right? Like, yeah, it dropped 1.5% in a matter of 6 weeks, I think it was, the prime rate.
So what? Go ahead.
I was just gonna, there was a, I'm really curious about negative interest rates, because I know that was it Germany or some Europe, there was some negative interest rates at some point. I don't know if it's still happening, but how does that even work? And is there any chance that's going to happen here? People say, oh, interest rates can't go any lower, but I've heard of negative interest rates. So maybe you could just tell us a little bit about that.
We've been told that no, there's no way the Canadian economy will allow, or the federal government will drop interest rates into negative territory. Prime rate, it's set by the overnight lending rate, and the overnight lending rate is a 1/4 point, so 0.25%. So right. We are extremely close to that zero mark, right? And they've kept it at the 0.25% now for over a year. It changed last March with the pandemic. Mm-hmm. So there was some fear, and some economists were, negative rates might be coming, and, but no, it's been definitely shot down that no, that's not happening. And frankly, our economy has actually been stronger, way stronger than what they expected right. From the pandemic.
As can be seen by the housing market, which nobody, exactly. Very few people, I think, predicted to see 30% rise in housing prices during a pandemic.
Yeah. Right?
Yeah. So.
Okay. The other thing, the federal government has come out with a program. Actually, it's been around for a few years now. The website's called A Place to Call Home. And we really haven't utilized the program much because, honestly, in Victoria, Vancouver, and Toronto, when they put out these national programs, quite often our buyers aren't able to fit within the program due to house prices being above, or the criteria doesn't work. But interestingly enough, they've increased, and today was the first day. Increase the qualification of the program. So what it is that the federal government will basically lend first-time home buyers only 5%. They'll match your 5% down payment, but you are in essence sharing ownership with the government, so that when you sell your home, you are giving up 5% of the market value of that at that time.
Mm-hmm. So wow.
It's not what it will do, or what it does is I pulled up an example. It lowers your monthly payment by about $200 a month, based on a purchase price of $675. So your monthly payment decreases from $2,600 to $2,400, and it drops your CMHC premium by about $8,000. So there is some benefit.
Okay. Yeah.
But you are giving up 5% ownership in your home.
Absolutely. But it's 5% ownership you may not have had in the first place if you couldn't have gotten it. Like if you're getting 5%. If you're getting 20% more home for giving 5%, I don't know.
Yeah, it helps from a cash flow.
Sounds like a reverse bond, where the government's investing in you.
Yes.
Actually, yeah, that's a good point.
Yeah. So, so based on a purchase price of $675, your minimum down payment would be $42,500. The government would match that to increase your down payment to $8,500, and then you're giving them the 5% ownership. The qualifying income increased to a maximum of $150,000 annual household income. Previously, it was $120,000, and the total borrowing amount increased to 4.5% of your annual income, and it was previously 4%. So it's made it, like maximum based on 150,000 income. The maximum mortgage amount would be $675.
Can you tell us the name of that program again and the website, please, for anyone?
It's called A Place to Call Home,
Mm-hmm.
and it's a federal incentive program.
So I've got a buyer who's looking for a place for, her and her son. She's been building up her down payment. She sounds like she might be within all of those parameters. It might make sense for her to be able to get, shelter where she's been renting, and is just really, the value of, sharing 5% ownership with the government versus not having something and continuing to rent might be strong value there. Also, 100% of nothing is still nothing. And if you're waiting, a couple of years to buy a home versus getting a home now, sharing 5% with the government may not be such a bad thing. If property values continue to rise, you'd be in a better position than if you waited to actually save up the down payment you require.
Better than being in a relationship with a bad person.
Yeah.
At least the government won't make a mess. I
guess everybody's got their own judgment about government versus good versus bad, but I get what you're saying.
The catch is you can't refinance. Like, there's a lot of fine print to the program that's important to consider and look at. Right? It's true that, if you go with a 5-year term, 5 years goes by pretty quick, and people forget that they signed up for this program. And then they sell, they don't, if they don't let the broker at the time know that they had this ownership program, they could be in for a really not so pretty surprise when they find out how much they have available for their down payment towards the next home.
Well, it'll probably show up in their title, though.
I was going to say.
Title. Yes, it would. Yeah.
Okay.
So my thought, based on the announcement that this is going to be happening, this change, I think there's going to be a little bit of a rush on purchases over the next few months. What do you think, Andrew?
Every time there's a change, if it's an opportunity, it'll make a bit of a rush. Yeah, it'll open up some extra income, extra money, or extra activity for sure. Positives bring a little bit of a bump, and negatives bring a little bit of fear, and then people get over their fear and move on. So, lots of things happen where we think the sky is falling when there's a governmental change for the negative, and then people go back to business as usual after a few weeks or months. I think and the other way around as well. People say, "Oh, there's a great program. Let's look into this." And even if they don't use the program, maybe they are now suddenly thinking about real estate. There's a bit of a rush, and then again, people go back to business as usual.
Yeah, I agree.
Everything sort of reaches its equilibrium. Yeah.
Okay, so I'm going to ask Danielle, if she is with us, to please, do you want to give us your contact information, Jen, if people want to get in touch with you?
Yeah, my phone number is 250-217-4925. Email address j.lowe@dominionlending.ca. And my website is jenlowe.ca with an E after the LOW.
Okay. Jen, JENLOWE.ca. Okay.
And right.
Andrew, what's your contact info?
You can reach me at info@andrewplank.com or call me at 250-360-6106. Happy to talk. Jane.
You can reach me. Thank you. My name is Jane Johnston. I'm with the Briar Hill Group at Remax Camosun. My number is 250-744-0775. You can email me at briarhillgroup@gmail.com or visit my website at briarhillgroup.com. Just remember, every Monday we're going to be talking about real estate here on He Said, She Said, They Said with Andrew and I, and we'll be having guests as we go along. If you have a topic you want to for us to discuss, please email me or Andrew, and we look forward to serving you. Thank you so much for coming, Jen. We really appreciate it.
Always a pleasure. Thanks, Jen. Nice to see you.
Thank you for having me.
Okay.
We'll get your contact information updated.
Have a great week, everybody.
Thanks.
Oh, there it is. Already done.
Okay. Bye-bye.
Bye.
Bye.
Danielle, you can press end show.